It's my pleasure now to introduce Bruce Van Saun, the Chairman and Chief Executive Officer of Citizens Financial Group, a large regional bank with significant presence in New England, the Mid-Atlantic, and the Midwest that serves more than 5 million consumer and business customers. Bruce joined Citizens in October 2013 from the Royal Bank of Scotland. He led Citizens to a successful IPO in September 2014 and full independence from RBS in October 2015. Citizens continues to focus on delivering well for its stakeholders, including customers, colleagues, communities, and shareholders. Bruce, welcome. Thanks for joining us today.
My pleasure, Dan. Happy to be here.
And Bruce is in Newport, where he's got together with his leadership team in person. Maybe he'll tell us a little bit about what it's like to be with others, which is great. But as everyone here knows, to compete successfully in this dynamic business environment, you have to be well positioned to support your customers over the long term, and you're going to have to combine forward-focused leadership, the right strategic choices, a culture of innovation, and decisive transformation. That is why we brought Bruce in. He's done all of those things, and we're pleased to learn how he's helped Citizens navigate the past year. But if you would, Bruce, let's take a big step back for 1 second. Talk a little bit about the trajectory since your IPO. The banking landscape, your journey. It's been quite a few years for you and the firm.
Yes. So I came aboard in October of 13, and the most important thing at that point was to develop a strategy that could take the bank forward and address some of the shortfalls in investments that our parent RBS had some challenges, and so we had some significant gaps. I needed to go bring in a great leadership team, so that was one of the early things I focused on. And once we got the strategy developed, we aligned everybody against the strategy and started executing. And it's been just a very consistent effort over time to start to grow the bank, address the deficits, move to some interesting offense in some areas where we felt we had a right to win, and then just drive that performance forward.
So you've been doing all of this against one of the most disruptive backgrounds, perhaps, in the history of the financial industry. Talk a little bit about, and then that culminates, of course, in a worldwide global pandemic, right? So talk a little bit about leading through this time, if you could. You brought together the team, but all through this, the technology is changing, consumer behavior is changing, you're growing, the competitive landscape's changing. Talk a little bit more deeply about the last few years and some of those challenges, if you would.
Yeah, so certainly competition is at an all-time high, and some of that is fostered by technology innovation. So the whole world moving to much more digital business models, cloud computing, introducing kind of a new way to run the bank. New platforms that are open architecture that can take in APIs and innovation from fintech partners and others. And so it was really important to, not only just focus on covering gaps and catching up investment, but to kind of look around the corners and have a leadership team with a lot of experience that could see kind of where were things going, how were customer preferences for how they wanted to be served, how was that changing, how was the technology requirements changing in terms of offering a great digital experience for customers. More digital sales ultimately was the channel that was going to explode in growth, and so we had to figure out how to turn the physical distribution more into advice centers, and move transactions to smartphones and ATMs and get the channels working together. So there was a huge amount of change, and I think it comes back to what I said, is having a leadership team that has a lot of experience and has an ability to think strategically was really important to navigate all those changes.
And then we go into, say, February last year. What's your first signal that this is going to be something unlike anything we've ever seen before? And what did you start to do?
Well, I think we were watching, the Fed had already started to cut rates, and folks were paying attention to what was going on in China. I don't think it really dawned on folks how bad things were going to be, probably till about February. But we started to run some scenario analysis and think through what ifs. I don't think anybody expected the full extent of the lockdowns and that the U.S. economy would be put in a coma for a while. But I'd say, again, their experienced leadership really helped us. We had to make some very rapid decisions and mobilize folks for support of some of the government programs like the PPP loan program, where we pulled teams from across the bank. We worked through Easter weekend to stand up that platform, and we were able to get 50,000 customers loans and saved over 500,000 jobs. And so it was really great just to see everybody rise to the occasion. But again, having that experienced team, being able to trust them that they could be decisive, I could empower them, and we could take decisions quickly. That was a key to making it through that period.
Were they home? Were you ever in person? What was the scenario? How did you actually interact with each other?
Well, a nucleus of us came in regularly, and then, fortunately, our technology, our ability to quickly move people to remote work, and then we use WebEx, but I've also used Zoom, and so other kind of virtual meeting arrangements kept us in very close sync. So whether people were in the office or just working remotely, we found a way to make that work. I'd say the other distinguishing things of that period is we've had a culture focused on our customers and really taking great care of customers, being their trusted advisor on life's journey. And so it really was a rallying cry and an opportunity for our colleagues to live their purpose and to actually make sure customers were getting through the challenges that they were facing. So, interestingly, we did a organizational health pulse survey towards the end of the year, and we had hit our all-time highest organizational health score because I think people felt they got to live their purpose. They took care of customers. The bank kept them safe and showed good concern for their safety. So really, you look back on the year, it was a remarkable year, but everybody rose to the occasion. Having said that, it's great to now get back to life as we knew it, because that was obviously far preferable to what we experienced last year.
But what was some of the big takeaways? What are you going to keep coming out of this time? Obviously we're all excited to get back and actually see 3D versions of humans. But what do you want to keep coming out of this that you were surprised perhaps that you found along the way?
Yeah. So I would say number one is just digital transformation is critical. And so we run an annual improvement program for the company where we bunch of ideas that either help us run the bank more efficiently, introduce new technology, or do more kind of cross-selling into our customer base. And the key cornerstone we called Next Gen Tech. We launched this in 2019, and that was migrating infrastructure to the cloud, re-architecting the core platforms, going to digital first on all our front ends. And then as we went through the pandemic, we said, we have to look at customer journeys and try to make the whole experience for the customer simpler, easier, and digitize those experiences end to end to the best extent we could. So I think we had a leg up on most of our peers in terms of formulating that program. It put us in really good stead as we went through the pandemic. And now coming out of it, I'd say the pandemic has accelerated those digital trends by 3 to 5 years. And so I think we're seeing the benefits. We rolled out a new mobile platform, which is getting great ratings in the App Store. We're seeing huge increase in sales, 30% increase in digital sales. It's a different game to think about the world when people aren't coming into the branches and they're used to the physical contact. Now you've got to be able to build relationships through the digital channel and kind of delight people when they actually don't get to see you all the time. So we've had to do that. We have to shift our marketing so that more is going to top of funnel and in support of our brand, because people choose brands. And so less specific product marketing, more top of funnel marketing. So there's a lot of changes just around how the bank is running, moving to a digital model fast, trying to keep the channels integrated so our most satisfied customers use all the channels. They favor an omni-channel experience. So we have to get that model right. So I'd say that's the biggest takeaway from the pandemic. Other things, one thing is clock speed. And so we were able to stand up PPP fast by streamlining the way we operate, moving to agile ways of working, empowering our people, and people loved it. They thrived under that. And so even though we're in a heavily regulated industry, how can we move to these agile approaches, keep good governance over what we're doing, but empower people, tap into their ability to innovate and really focus on the customer. So those are a couple big things.
Talk a little bit about that and your evolution as a leader, as a CEO. Were you one kind of CEO when you started this journey, and have you really changed over time? Because now you're using, we're having a conversation that sounds akin to Silicon Valley as much as banking. So talk a little bit about your evolution as a leader and what you've had to do to change to lead all of it.
Sure. Great question, Dan. And, I would say when I first got to Citizens, job one was to build a great team. So I spent a lot of time trying to attract talent into the organization and telling the story. But the company wasn't working under RBS. Our ROE was way subpar and it needed to change. And so I would say early days, I probably had more of an authoritative leadership style, along with some key members of my team, because we had to instruct, this is what we need to do, this is how we need to change, this is where we need to take the company. As we set the agenda and we started to execute and we filled out the top team with really great talent, then it was possible to step back, really empower the team. They knew where they had to go. You get a lot of leverage from the team if you empower them. And so I've been able to kind of adjust the style to the situation, which has been really, really important. And the role of the CEO is changing markedly over this period. And so in the early days, you didn't have purpose and DE&I and social justice and all these issues that have crept in really over the last 2-3 years. They were always there, but they weren't as significant. And so, speaking out on social issues, there's a lot of things for CEO to consider. And so I've found that you have to step up and elevate a bit more, get yourself out of tactics and the weeds, trust your team, spend more time thinking about long-term, meeting with other folks in the industry to really try to figure out what's next, what's the future of how this business model needs to move to be successful. And so I'm doing that, and I'm encouraging my top team to do more of that as well.
And one of the key constituencies, obviously, that we don't talk about enough is the board. For instance, talk a little bit about working with your board through all of this and through that time of change. Who's on there? Do you educate them? Do they educate you? What's that? How do you manage is the wrong word. How do you work with the board to make sure that the company's going in the way you think it needs to go?
Yeah. So it's a great question as well. So when I first came aboard, I had been on the RBS board, and I had 2 American directors on the RBS board who came over to the UK for the meetings, and they wanted to come with me to Citizens. So there was a small board at Citizens. Most of the decisions were taken from London, so it's probably more of an advisory board at that point. And I knew I had to get the company public within 18 months, so I had to refresh that board. I built on what was there, brought these 2 senior American veterans of banking over to help me. I recruited some new directors. So we established a board of 10 or 11 folks with a lot of industry experience. And, they were a great sounding board. They had, we focused on the culture of the board and collegiality, the relationship with management, and we want constructive, effective challenge. And so we built that all out, and it served us in really good stead through kind of the whole ride from the IPO up until we got to the pandemic. We then, had lots of issues coming at us front, left, and center. And so we decided that the board would have weekly calls starting in March. And so we would give a full briefing from key members of the team, what we were seeing, what we were doing for customers, what we're doing for colleagues, what the financial situation was, what kind of credit reserves we felt we needed to put aside. And so some very in-depth, good meetings, but the board was right there with us and really engaged, really interested in wanting to make sure that we came out of this period. And eventually we were able to pivot and go from playing defense and just making sure that things held together to, okay, so what are we learning? How is this going to impact our strategy? And so we already, by September, had refreshed our strategy and looked for what are some new opportunities we're seeing and what are some risks and how are we going to deal with those. So good forward-leaning board, I would say. In the early days, the regulators had the whole industry in a headlock. And so there was far too much time spent on regulatory matters that should have been left to management. And over time, the regulators have, I guess, relaxed a little bit and think that the banks have made a lot of improvement in their governance. And so they've let the boards go back to what they should be focused on, which is strategy. So I think our board is really excited by that we're having some great dialogue around strategy, and they're keeping up with all the things that we see in terms of competition and customer expectations and changing technology.
And has the board changed much in its composition and the folks since you first got aboard?
Yeah, so this is a tough one. So when I first came aboard, we had a mandatory retirement age of 72, and I looked at the age of the directors, and some of my key directors were going to go off right away, so I raised it to 75. But we've now had 3 directors kind of so-called aged out in the last 3 or 4 years. But I've been able to attract, the story is a good story, and so we've been able to attract some really talented replacements, and we've been able to maintain that same collegiality. And I find that really interesting dynamic in the board because, every person on the board has their own set of relationships with the other folks, and that has to be built and cultivated over time. So you spend time thinking about, the committee assignments, that when you have dinners, who's going to sit next to who, so they get to know people better. And so we've been able to, I think, just keep things in a really good place in that regard.
So give us a tip. Give us a tip on cultivating that kind of relationship with the board, because it is so important and we don't talk about it enough, because they can be a real asset. You have the right board. They really do bring experience. When you go through a cataclysm like this, there's some smart people. What was it like working with them? Maybe there's an instance you could relate where the board was really there that really helped you get through this time, and how'd you cultivate that?
Yeah. So, I'd say that, there's almost too many instances to recount, but the early days, we had to figure out how to decouple from RBS. And so we had one RBS director till they sold down to a certain level. And then we had an observer for a little while till we sold down to another level. But that separation process was complex. We needed to negotiate the right to their logo. There were services that we jointly supplied to clients where we needed a transition services agreement on some of those things. We had to figure out how fast we could push stock into the market because there was a clock on a full exit from RBS for 3 years. So having that veteran heft around the board table and people who'd had experience, like Art Ryan was our lead director. He had led the demutualization of Prudential, the big insurance company. So he had a lot of experience there. And so you just, talk those things out. What do you think? What have you seen? What'd you do before? And so that was really, really helpful. The other thing I'd say that really helps cultivate the board is that we're very transparent. So I tell the directors, especially the new ones when they first come on the board, you can go anywhere in the company, you can visit any site, you can set up meetings with anybody that you want to meet with, and we'll facilitate that. And so they get to know the key people around the company. They get to go see our locations and what we do. And I think that's also really positive. We have about 35 people that we put into a program that when the board's in town, the board will hold little sessions with two directors and maybe 4 colleagues in that group of 30, just talking about what's happening in the company, and they can ask questions of each other. So it's great exposure for our top team, and it's great exposure for the board to really, on an unfiltered way, just learn what's happening in the company and, how's engagement, what are people worried about, what are people excited about. So that's also been a real positive.
That's a great tip. Switching gears a little bit to digital. Obviously, this is perhaps the biggest story out there in the financial services industry. what point did you really realize that this was going to be so transformative? And that you really needed to lean into digital banking? And talk a little bit, if you could, about that time, and what you've done, and what lessons perhaps others might take from what you found.
Yeah. So, I'd say we saw the potential by looking at other industries and saw what great companies were doing, what Netflix was doing, how the big tech companies could personalize offers to their customers and really use data to gain insights into what customer needs were, and then offer things in time that were appropriate, that didn't waste the customer's time. And so all the way back in, I'd say, 2014, we brought a senior data scientist out of Chase who had been developing JPM's program, and we built a hub of PhDs around him to ultimately start to really explore the data that we had and how could we organize it to start to deliver that use that to deliver better for our customers. We also thought through the steps we needed to take to go more digital in our key platforms. So the first big one was probably in 2017 or 18. We moved to a new global cash management platform, which became imperative for us, Dan, when we started to move up market on corporate customers. We had a great platform that was winning awards for middle market companies, but as we migrated to bigger companies that had bigger wallets and we could do more for those bigger companies, we would bump into JPM and B of A and the mega banks with all the money they were throwing at their platform. So we made this decision, even though we had a good platform, if we're going to play in a different pond, we need to re-platform and spend the money to do that. So we did that, and that created great digital access to data, and it improved the stability of the operating platform and really set us up to compete effectively against the big boys. We knew we had to do something similar on the consumer side. That was fairly complex to launch a whole new platform. We brought in a firm called Backbase and used their technology to innovate and largely build. There was some stuff off the shelf, but we built a platform that's very flexible, that we can have new drops every week if we want to, of things that we learn, customer insights that we have, that we can add functionality all on us. We don't have to wait for a vendor, but we can do that. And so we got that in place last year, and as I said, it's been very highly rated in the App Store, and it conveys a very positive impression about the company that we're kind of current and we can do things and keep up with other industries. And so that's been I'd say something we had all along, but the pandemic certainly increased the importance on that, and now we're looking to accelerate some of the investments that we have on our future roadmap.
You're obviously talking about sucking in an enormous amount of customer data. You have access to all kinds of information on customer trends and all that. What's the data telling you about the banking customer right now and what they want and where they're going? We hear so much about it. If there's any kind of friction in the system, people just don't want to do it. They've just gotten used to Amazon. But what are you seeing from the data that you're actually getting back from your customers about how they want to behave, how they behave, and what they want?
Well, we can identify opportunities for customers. So we can figure out if they have higher cost debt that should be refinanced. We should figure out if they have an equity buildup in their home that they should be tapping through a home equity line of credit, because it's an efficient, cost-effective way to borrow. So we're now big in point of sale finance, which is an alternative to credit cards. And so we can identify which customers don't want to get caught in the debt trap, typically younger customers, and we can directly market them for a different way to borrow that's more responsible. So, that's the kind of things that you can use the data for. Obviously it's anonymized and we respect privacy, but we can go out to those households and offer them things that actually can improve their financial health, which is great. It's part of our purpose.
I do want to say out to the audience, so please, questions are open. Just start sending questions for Bruce whenever you want. Talk a little bit about, obviously, when you do technology change, like what you're talking about, the kind of tackling disruption. The tech is one thing, but the culture is another. Getting the people, the talent, talk a little bit, if you could, about leading that journey How did you attract the kind of people you're talking about? These are some of the toughest to attract people in the country. How'd you get them aboard at Citizens? What's the story you tell? And then how do you get the whole place rolling in this direction over the last few years?
Yeah, I'll break that into two, Dan. So just in terms of the talent attraction, what was very unique about the Citizens story is that most banks, if a parent wants to rid themselves of an operation, they sell it. But Citizens was of such a size and the regulators were of such a mind that there really wasn't an opportunity for RBS to sell the bank back at that time. So we had to take it public and they had to sell down. So effectively, I had been the group CFO at RBS. They trusted me. They said, here's the keys to the car, develop a good strategy, build a good team, and go build a great bank, which almost never happens. So, that was almost serendipitous that, I stepped into that situation. I could go around and talk to people and say, hey, if you're a cog in the wheel of JP Morgan, like Don McCree, who runs commercial for me, he was probably one of Jamie's top, 15 guys, but had been there a long time. Like, how about being a vice chairman here and being one of our top 3 guys and helping me steer the wheel, have a blank canvas, be very customer focused enterprise without all the bureaucracy and BS that occurs in a huge bank. I knew what it was like because I was at RBS. I said, this is going to be kind of a sports coupe that we can drive around and take where we want to go. So that really wasn't that hard. When you got people excited about the potential for what we could do with this bank, it was in attractive markets. It had been undermanaged and underinvested in, but it created a great foundation to build something spectacular. And then over time, we've still, once you get the top team in place and they know what good looks like and they know what talent is, they have followership, they bring people along. And so I'd say the talent factor here is really strong, probably as strong as or stronger than most of the regional banks we compete against. We're also helped by our geography because a lot of the folks, when they leave New York, they want to work for a kind of Northeastern bank as opposed to some of the other regional banks that are headquarters elsewhere. So anyway, that's been real positive. When it comes to culture, the second part of your question, it was interesting that Citizens culture was centered around the right things. So they called it the 3 C's: customers, colleagues, communities. Do a great job for customers, be a great place to work and build your career. For colleagues, make a difference in the communities that you serve. Those were the right areas to focus on, but it wasn't in enough quality and quantity. We had to up the kind of effort around those things to actually do more with them. We did that. I like to say 2 other C's crept into the culture. One was comfort and one was complacency. So it was far-known bank. They weren't held to task. They weren't facing public shareholders. And so we had to drill that out of the culture, which going public was a great thing to facilitate that. So all of a sudden, we needed a better sense of urgency. We needed a better sense of accountability. And so we put that into the culture. And then over time, we've added things into the cultural mix here. We need to be innovative. Check. We brought that in. So there's a number of, have a growth mindset. There's a number of really important aspects to the culture that we were able to build on those original foundation of the 3 C's. So I think people who work here love the culture. It's nice people, very focused on customers, delivering for customers, understand what our purpose is. And so it's very refreshing for people to come from somewhere else and join Citizens.
How do you do that personally? How do you communicate that? Is this town halls flying around, and then how over the last year perhaps have you had to change that up to make sure that the things that those 3 plus C's, right, that the right C's are around, the wrong C's are going away. How do you actually do that?
Yeah, well, we do have a mission, vision, and values statement that we call our North Star. And so any chance I get, if I'm doing a town hall, I always have that as one of my key slides. And, this is who we are. This is why we're here. This is what we're focused on. And I think people have internalized that at this point. And so that's a great feeling. In the last year, it was almost just natural that if you have a customer focused organization, that this was an opportunity for people to step up and really demonstrate that. So I don't think we had to really push people into living the credo. We call it the credo. It's like, just walk the talk, just go out and do what we know how to do. You have great opportunities here to shine, and people rose to the occasion. It was terrific.
Taking a step back, look at the macro implications last year. You went through 2008. You went through the financial crisis. Can you compare the last, say, year and a half and the period that we're in right now with that time and its implications for banking and financial services?
Yeah, so it's very different. So the last time around, the Great Recession, banks were part of the problem. They weren't part of the solution. So, I think the kind of capital structures and risk management weren't quite up to snuff, and so needed help from the government to make it through that period. The cultures around the customers were often not where they needed to be, so lots of little fees and annoyances, and some of the investment banks trading against their customers, not having their customers' interests in mind. So there was a lot of work led by the regulators, who I'd say did a good job initially. Sometimes the pendulum swings too far, but then they brought it back. But let's get a much better, stronger, rigorous balance sheet framework and stress testing regimen in place. Let's make sure that you have conduct policies that are really focused on doing well for your customers and treating them as true customers. And so all those changes were made over the decade after the Great Recession. And so when we came into this pandemic, it was a much better outcome. So banks were part of the solution, not part of the problem. Strong capital position, able to hit to meet all the demands on the credit lines that corporates came in and wanted to borrow money and hoard money initially. We had the wherewithal to do that. We had the capacity to make the PPP loans, to do loan modifications and forbearance for our customers to help them get through. So we get, I think, a little pat on the back here from society for how we stood up and rose to the occasion and really did a nice job through the pandemic. Much different than what it was last time.
I think that's absolutely true. I don't think anybody could say any different. That this was a health crisis that did not become a financial crisis because the banks were as well fortified as they were coming out of last time around.
Yeah.
What are you seeing in the market right now? How's demand? Are you feeling the growth? Are you feeling a lot of borrowing? I know on the consumer side, consumer demand is through the roof. There's lots of pent up dry powder from people. They've been doing nothing, right? They've been watching Netflix and eating brownies for a year, and now they're out. They want to do stuff. What's your sense of where we're going and what the implications are going to be for your business and for the industry?
Yeah, so I'm very bullish that the economy's on a good trajectory. We'll probably have 7% plus GDP growth this year, and probably still 4% plus next year. So it's a really strong period of growth, and banks' fortunes are often tied to the economy. And so when the economy's growing and loan demand picks up and rates start to trend higher, all those things create a very nice tailwind for banks. So we're excited by what we see. It's a little fits and starts in terms of how fast loan demand is coming back, and the customer base is so flush with cash. The Fed has pumped a lot of cash into the system, and so and the federal government has issued a lot of checks to individuals, and so we have a very low loan to deposit ratio now. We'd love to be making more loans, but until you burn through some of that cash, you're going to see, I think, just loan demand pick up in selective areas before it starts to pick up more broadly. And so we're seeing areas that are price sensitive to cost of funds, like mortgage refinancing, like student loan refinancing. We've had good demand throughout in those areas. The auto market's really hot. Used cars are going up in price, and people want to own them. So we've had a lot of demand there. And then also our point of sale finance business, we've won a lot of big marquee assignments, and so that's a ripe area for growth that'll take share away from credit cards over time, and we're seeing some nice growth there. So the consumer side, there's some pockets where we're seeing growth. Card balances were paid down with all that cash, so there's really not a lot of growth in revolving credit at this point, but there's other areas that are offsetting that. And the corporate side, it's really, they've got to burn through some of their cash. And they've got to be confident that, the demand for their products, the higher levels of demand that are returning, are sustainable, and that they can then get the labor in that they need, and they can get the capital expenditures, the supplies that they need to meet that demand. There's a little bit of friction and tension there around that. And a lot of our corporate customers are saying they can't get the people back to work that they need, given the upsurge in demand that they're seeing, or their supply chains are disrupted and it's taking a long time things are on back order. And so I think those things are transitory. The new favorite word of the Fed, transitory. I think those things, some of those will abate over time, and we'll start to see, I think, a more steady upsurge in corporate demand once we work through those near-term challenges.
I want to get to, we do have some questions from the audience. I want to make sure we have time to get to them. No matter how much change comes to the industry, what doesn't change in your experience? What's been the constant over your 3 decades in banking?
Yeah, it's a thoughtful question. I think it's really just the need to know your customers well, and serve them well, become that trusted advisor, whether it's a consumer customer or a corporate customer. If you can show up every day with good ideas about how to make your customers more successful, they're gonna be loyal to you. And so that's where it's all won or lost. I mean, all the other stuff, we can put good people in, we can run with financial and operating discipline. Those are important. We have a commitment to excellence, that we want to be excellent in everything we do. But kind of the game is won or lost at the customer level. And that's where we need to keep our focus. And that's been tried and true, consistent for 3 decades in banking.
The tools, the techniques may be a little different, but the focus has to remain.
Absolutely. The expectations on customers about what constitutes a good customer experience, or what's a value-added product or service or piece of advice, the bar's gone up on change on all those things. But you need to keep up with those things, but you need to build that relationship with the customer so that they really trust you.
Another question from the audience: what can banks learn from their non-bank competitors? Their new non-bank competitors.
Yeah, so we have some great, tough, challenging non-bank competitors, and I think the thing that I admire about them is how innovative they are. And so you've had the fintechs come in and with a kind of, here's a segment of the market that we think is underserved or not served well, and we'll attract some venture capital, we'll hire some Stanford engineering grads, we'll build some products, and we'll go attack those segments of the market. And they can innovate really, really well, come up with ways to delight the customer, and certainly aspire to gain some market share. They don't always have winning business models. They're not concerned in the near term about their profitability, but just in terms of what they can develop and deliver, I wish I had that clock speed, and I wish I had that level of creativity inside the company. We continue to try to do that, but we don't have to do it 100% on our own. That's the other good news of the story, is that we have 25 fintech relationships where we're paying them as our partner, sometimes with joint revenue streams that we split, or sometimes it's just a straight fee for usage. That we can incorporate and port over some of that innovation, and then just and deliver it inside how we're running the bank and what we're doing for customers. So I think that's also a very exciting aspect here, that the fintechs keep you on their toes. They're great innovators. Sometimes they're your challenger and your competitor, and other times they're your partner. We have a number of those relationships that are fairly complex, like with SoFi, for example, but we can be partnering and helping them in some ways, and then later in the afternoon we're competing for the same customer. So it's really an interesting dynamic.
Another question from the audience: what's the bank doing to identify any future black swan events? Are there any activities in the financial services industry that concern you at this time? Any CEOs floating out there? Is there something slinking around we should be paying more attention to?
Yeah, that's a great question. And I've read the books on the black swans, and you never really see where they're coming from. I would just point out that we had the pandemic. We had a pandemic on our list of risks. So as part of the annual review process. We identify the top risks and we move them around, what's increasing in importance, what's lower in importance. But the pandemic was seen as an interruption to work. And so if there's a pandemic, how do we operate? How do we get people to the office, or how do we allow people to work remotely? That was the risk. So the risk wasn't that the pandemic could reach such epic proportions that the economy is going to go in a coma, and a lot of our customers are going to be struggling. So we didn't look past the kind of near-term issues that we thought that was the risk. There was a much broader risk out there that lurked right behind it. And so we use that example with our colleagues to say, let's comb through the list, but let's be thoughtful. Let's, talk to folks, think outside the box, read books, just try to think a little harder about how the world could be different and how it could move adverse, and what would we do about that.
Flip it over, 30 seconds, you have just about a minute or so left. What's the big opportunity you see coming out of the pandemic? Economy's booming, obviously some inflation fears, but what do you see as the big opportunity in your industry right now? What are you looking at?
Well, I'd say, it's to answer just for citizens specifically. We have 3 or 4 big initiatives on the consumer side and 3 or 4 on the commercial side that we really think we can pile drive and make a lot of headway and end up where growing revenue streams where we have a right to win, and we'll end up coming out of this period with more momentum than our peers. And if I had more time, I'd take you through those things. But banks our size have to prioritize and have to be disciplined. We can't be all things to all people. We've got to pick 3 or 4 things that we can put our capital behind, we can put our shoulders to the sled, and we can really drive those things. And that's what we've done. And so we're excited coming out of this that if we made those good choices and we execute well, we're going to be very well positioned going forward.
Well, Bruce Van Saun, I want to thank you so much for joining us today, for taking the time out from your executive leadership retreat.
All right. A very nice conversation, Dan. It's my pleasure.
Very much appreciated.